know you with their friends, girl, you got it.
Hey, Pinko FX here. Sorry for my voice, a little bit sick, but still came out to do this YouTube video on how I enter the indices market, whatever Forex market, VIX market, whatever the market is. It's the same way I proceed to enter in the market. This trade was also called in the indices sniper signals group. This previous buy, which was on Wednesday, July 9. This was called in the signals group, same entry. This is the entry that we would be going over though. This was on Thursday, July 10th. Trade was taken on gold. Mind you, this is not about my technical analysis. I will create more videos explaining how I go about marking up my charts, etc., etc. But today we discussed how we talk about how we enter the market and how to get the best entries as possible. So this is not going to be a very long video. So I'm going to bring the market back to about here. Yeah, here. Okay. All right. So prior to the previous buy, sometimes it depends. You don't take random trades within the market because that has a lot to do with your entries as well. It's not only about candlestick anatomy or how the candle closes if the candle is bullish. A candle can close bullish and then the prior candle that is being formed that would form a bearish volume and take out that previous bullish candle. So there's sorry, there's a lot more aspects to entries than just looking at one single candle. More fundamentals around the situation of volume, candle closure, time frame, analogy, a lot of stuff, right? So when it comes on to gold, I trade gold, NAS, and USD. Well, when it comes on to gold specifically, I trade gold Tokyo slash Asian, and also New York session. So I trade gold in um, basically two sessions, either New York or Asian, right? So this was approximately 3 o'clock Eastern Standard Time after the buy, which was on Wednesday. Right, we did took that buy in the indices signal group. I'm gonna show that buy signal as well. Right here, it's in a range, right? So when the market is in a range between support and resistance, either you're gonna you use your time frame, right? I'm on my 4 hour time frame. Based on my 4 hour time frame, the market is in a mid range. It's kind of in a range, but it's showing a 4 hour structure of lower low, lower high, lower low, lower high, lower low. And it failed to respect this previous low high, which have continued the market down, in which I did took a buy right here to fill out this area because price did break this area and did not give me a retest. So this is the reason why I took buys up to this area for a continuation down, right? So I take my counter trend buy right here, but after my counter trend buy had hit take profit, it's either price is going to go back down or it's going to break above this area and go back up. That's the thing when it comes on to trading. A lot of people guess and think like, hey, the market's going to go down. That's what I predict the market. No, the market can go up, down, or sideways. You allow the market to show you where it's going. Then you say, hey, I'm going to use these support and resistance area. Then I'm going to use structure. Then I'm going to use other confluence to put together, like gather your hypothesis, gather all the information you need before you make a decision. A lot of people like to guess, and when it comes on to me and trading, I like to see what the market is showing me before I go in, because I think you should be more patient and disciplined than to be in the market at a disciplined like rate, like, hey, I'm going into the trade based off everything that I know, than to be in the market and wishing that you never take that trade, right? So right here, level of resistance, a 4 hour level of support. Price was going to either break below or above. I had a stronger feeling for price to be above because, as I said, this area was my lower high area that I buy to for market to create a lower high to continue going down based off the 4 hour downtrend. It did not respect the downtrend. It went into a range. So it was all about probability, right? The 4 hour candle was bullish. The daily candle did close bullish. So we're in after 5 p.m. A new daily candle would form, we're going into Tokyo session, Asian session, Tokyo slash Asian. That's about 8 p.m. Eastern Standard Time, 9 o'clock thereabout. So once price broke above this area, I would be looking for specific candlestick anatomy, like specific things, the strongest time frame, like either the 30 minute or a 4 hour breakout above. I'm looking for rejection, possibly retest. It depends. Not every time you're gonna get a retest within the market, but sometimes you have to be an aggressive entry type of person. Like every time you go in the market, sometimes you gotta be aggressive, and hence you're gonna miss out on a lot of trades. Sometimes you got to be disciplined based on other factors like the volume, the daily closure, the overall structure. Sometimes, but you got to like 58% or even 68% of the time, you got to be aggressive, honestly. So, yeah, to be in the top 1%. So, this is the 30-minute time frame, right? So, let's play it and see what's up. Boom, the market closed and reopened. Still in the range. As I said, I'm waiting for a closure above. All right, bam. So this is what I'm talking about, right? Bam, I get a 30-minute breakout candle right here. I'm on the 30-minute time frame. You can't wait on the 4 hour time frame. As I said, it depends on where the 4 hour time frame would close. So if you're trading Tokyo session, you know that the first 4 hour candle is going to close about 9 o'clock. The next one is going to close about 1 a.m. in the morning. So you have to take entries like from based off that 30-minute closure, right? You can't wait up like one a.m. in the morning. That's basically you going into London session. And gold is very nice sometimes at Asian session. So I got that 30-minute breakout right here. Price had already spiked. Like if I took entries up here when price spiked, my stop loss, I'm not aligning with my system or my risk management plan. So what I did was when it gave me that breakout, I set my stop loss below here, but I did not take the trade until I got a retest. Right here, I got a 30-minute retest candle. Where's the arrows? All right, here. I got a 30-minute retest candle right here. Price is rejecting. So what I did, I got a breakout candle on the 30-minute time frame. I got a 30-minute candle retest. I got a rejection from it, showing like it's respecting the area. What else I did was I pulled my fibs from my swing low right here. You could go right here if you want to, it doesn't matter. Swing low to swing high right here. This should be better than my swing low to swing high. As you can see, price came back down to my 0.382 PRZ level. So that's for a reason why. And then I could go down to my 15-minute time frame and see a little bullish volume coming in, and then you got a pin bar right here. So I got like 5 to 6 reasons why I could possibly take this trade. So to me, it's a high probability trade. How and why, the reason why I set my target right here. I set my target right here because when I'm trading, I don't aim for, this is what a lot of traders do and make a lot of mistakes. They aim for areas like price doesn't have to go to that area, man. Like you have to be a person that journalize and backtest a lot. It really helps. So the thing about it is that when I'm aiming like for my targets, I aim for like 300 points, 200 points. It depends on what goal will give you per session, right? And goal will normally give you at the least 300 pips, at the most 500 pips. So I aim for the least, which is right here. This is about probably 280 pips, right? So that's my target. My stop loss would be below this low, this 15-minute low right here. And then all that entry confirmation, it was smooth. The target didn't get hit same time. The reason for this line right here, it was a 30-minute, actually, it was a 30-minute high in which price was actually struggling at this area. As you can see, also had a big rejection that closed below. So the trade became a high risk type of trade unless price actually broke below that area. But no risk, no reward, right? So there we go. This is in a Tokyo session. Yeah, I'll get them, mark off those areas. Those are zones that I know that probably would be respected within the area. If you look to your left, it was a marked off zone that price would react to those area. 6:30 in the morning, but I wouldn't be up. It would be basically me taking this trade and leaving it. So as you can see, it was a great trade. Target got hit. As you can see, this trade was from Tokyo session. So as I said, on minimum 300 points. If I set my target to here, it would be 400 points. It was also going into a Friday, so I didn't want it to risk it. So yeah, right here, as you can see, 400 points got hit. As I said, the max is normally 500, which would be about above a little bit more. But you can't always go for the exact amount that goal is willing to give you, right? You have to. Sometimes you got to go for the least amount. Sometimes you get reversals. It's just the market being the market. So that's about it. Appreciate you guys for watching. Like, subscribe, share, leave a comment. What do you want me to discuss next? I'll see you in the next one. Peace.